There is probably over 100 videos on credit scores and what you can do to increase your credit score and make your credit report look as delicious as possible to the credit issuer. However, I don't think there's a single video out there that explains the secret insider score. And just before I explain this, I need everyone to smash that like button so that the YouTube algorithm can spread this knowledge to everybody. So smash the like button for the knowledge. All right, everybody. So to increase your credit score, you need to obtain a variety of credit, whether that means a couple credit cards, a mortgage, a car loan, financing a phone, all of that's fine. You need to lower your credit utilization. You need to obtain a source of credit as soon as possible. That way you can build your credit length or credit history. The longer the credit length and the longer the credit history, the better. And have no derogatory remarks such as late payments, payments due, or collections. You don't want any of that. Okay, so that's the gist of that. Let me know in the comments down below if you want a full in-depth video on how to increase your credit score and how to make your credit report look as good as possible. Anyways, let's talk about the bank insider score. And by bank, I don't necessarily only mean banking institutions. I mean any other financial institution or credit union. And so this can also be credit card brands such as Discover or Amex, because these brands also give out their own cards. Like Discover hands out its own cards and so does Amex. Though sometimes they do create partnerships with other financial institutions to provide their services, right? MasterCard and Visa tend to work with other banks, whereas Discover and Amex work on their own. So a bank insider score is based on the moment you create a relationship with the financial institution. And so the moment you open up an account, and by account, it could be a checking account, a savings account, a brokerage account, a line of credit, a credit card, a car financing loan, a home equity line of credit, an investment account, whether a 401k or Roth IRA, and if you're in Canada, TFSA or RRSP. And the longer you have these accounts and the variety of accounts that you do have and the amount of money you have in the account or in the total spectrum of accounts, how well of a good standing position those accounts are in, such as no NSF fees or lack of NSF fees, no balance dues, no checks being bounced, no shady behavior happening within those accounts, then this makes banks more inclined to giving you better upgrades, pre-approvals, and better customer support without actually requesting anything. By upgrades and pre-approvals, I mean credit limit increases, upgrades from lower tier banking accounts to higher tier banking accounts, upgrades from beginner credit cards to more premium credit cards, to mortgage financing, to car financing, and to even business lines of credit and loans. Even if you just opened up your corporation and or sole proprietorship the same day, the fact that you built a relationship with this bank, you're more inclined to getting pre-approved for a business line of credit and or a business loan or a business credit card, even if it was just newly opened. And so you get pre-approved just like that with no effort when you do have a relationship with a bank. And at the same time, when you do apply for new services, such as a credit card, a line of credit, a mortgage, car financing, or whatever, you're more inclined to get approved for those services than a person who has a higher credit score or a better credit report than you, simply because you built a relationship with that bank or financial institution or credit union or credit card brand than the person who hasn't, or technically has a better credit score or credit report than you. For example, whenever you open up a new bank account and the moment you cash a check, most new accounts have a holding period of 1 to 6 months, meaning if you deposit a check within 6 months, they're going to hold that check from anywhere between 1 to 4 weeks. Whereas if you have a relationship with that bank account for like a year, you're most likely going to get access to that check immediately, or access to 80% of those funds immediately, depending on how large the check is. So I don't have a lot of physical proof to this because the bank insider score is based basically on insider information. I'm not the CEO of these banks. I'm not the developer who creates the algorithms for these banks. However, I've been using banking accounts at a very young age, at the age of 13, and I also been using credit cards at a very young age. and I noticed that I would get pre-approvals with banks and financial institutions whenever I had an account with them, and I would get offers either through email within their online banking platform or sometimes through a letter. And every time I got these pre-approvals, I was accepted immediately. And these pre-approvals were awesome because it wasn't just lame services, it was actually services that I did want, and I know other people want it too, such as personal lines of credit, premium credit cards, financing options, better mortgage rates. And this also stretches into your business too. When you create a relationship with that bank, like I said, you're more inclined to get a better business line of credit or a better business loan or a better interest rate. However, I do have this letter that a customer received from Wells Fargo where they do mention that they got declined for a credit limit because they didn't have any other accounts with Wells Fargo. And in that letter, it says no checking or savings account. So clearly Wells Fargo is looking at other accounts when determining your credit limit or approvals for other services. And I know this is true since I've been banking at a young age. The moment I would get an account with one of these financial institutions, anywhere from like 2 months to 2 years, I would all of a sudden get letters, emails, online banking notifications stating, hey, you're pre-approved for a line of credit. Hey, you're pre-approved for this premium credit card. Hey, you have the option to upgrade to this banking account. Hey, we have these mortgage rates specifically just for you. And I'm like, why am I getting these offers? I'm like, kind of scratching my head because I didn't apply for anything and I wasn't really sure. But one thing was always key, that it was a bank that I had a relationship with. It wasn't just a random bank. Sometimes that does happen, and that's called a pre-selection, and that's different than a pre-approval. Pre-approvals, 99% of the time, you get what they say, whereas pre-selection kind of just means like, we think you're eligible, but not 100% sure. And you're pre-approved when they give you an APR interest rate that's static, meaning that it's just 14.99% or it's 20.99%. It's not like we're going to give you an interest rate of 4.99% to 22.99%. So that's when you know these pre-approvals are legitimate, and every pre-approval I have ever received has 100% been legitimate. So the proof is within my experience, and not only that, I'm pretty sure if you ask anybody else that has been banking for a long time and has been banking at multiple other places, they will also tell you the same thing, that there is something called an insider score, and this insider score then determines you for other privileges. And I just want to show you in the right, here are some pre-approvals that other people are getting by simply just being a member at a financial institution. We have Discover, Chase, Langley, Tangerine, Capital One, Regions, CIBC, and more. Every bank does this, whether in the US or whether you're in Canada or even international banks. They all more or less use the same technologies to see if customers are pre-qualified for certain services. With that being said, each bank and or financial institution has their own algorithm and their own way of determining if an individual or customer is accepted or not. So what may work for Chase may not work for Wells Fargo, and what may work for Wells Fargo may not work for Capital One. However, in general, as long as you are a member of one of these financial institutions by using one of their services, you are more inclined in getting approved for other services that they provide. So what can you do with this information? Like, so what? These financial institutions are giving out higher credit limits, better credit cards, better mortgage rates, better financing rates. What does that have to do with me? Well, by knowing this information and by creating a relationship with a financial institution, then that's going to help you with building your credit limits, building your credit cards, building access to better mortgage rates, financing rates, and also increasing your chances of getting easier approvals. And also, even if you're an entrepreneur or business, that also means that you're going to get better access to loans, financing, lines of credit for your business, including larger credit limits. And the same thing applies to business banking. The moment you build a business relationship with a financial institution, the more your chances are going to be increased to get pre-approvals or easier time getting approved for larger limits and lower interest rates. So with this information, I recommend opening up 3 to 4 accounts at different financial institutions. It's totally up to you on where you want to apply to, right? You could apply to Chase, you can apply to Wells Fargo, or you can apply to for credit unions, such as States Employee, Navy Federal, Pentagon Federal, Boeing employees. Those are just the top 4. Not everyone can technically apply to these credit unions. That being said, there's a bunch of other credit unions and a bunch of other banks, and I really recommend you do your own research. You simply just go on Google, or you simply go on your web browser and you go to the different banks that are available to you, or different credit unions or different credit card brands, and you just compare and contrast the services they offer and how it can coincide with you and your personal life or your business life. And so, if you're on a low budget or don't have the funds yet, it's probably better to get accounts at financial institutions where that you don't really need to put a deposit in and that there are no fees. Now, if you're not on a budget, then you can apply to any bank technically, and if they happen to have fees, many of these bank accounts at different financial institutions allow you to waive those fees simply by putting a deposit in. Sometimes the deposit, it's only like $10 or $25. However, it could range from let's just say $25,000 to $15,000, and that's usually like high tier banking. So you could just go for the lower tier version, which usually is somewhere between like $500 to $3,000. It really depends. Each financial institution has their own way of doing this, but waiving fees by putting a deposit in is a big thing that many banks, whether in the United States or Canada or international, are doing nowadays. And so when you do open up these bank accounts, it's important that you keep the information. So they usually give you like a folder or some paperwork. Keep that, upload it to your Google Drive or file it away. That way you have access to it when you need it. 2, use spreadsheets or some type of like password manager. That way you can access your bank accounts whenever you need to online. This is very important to do so because the more bank accounts you have, the more managing you need to do. And that's why I say stick with 3 or 4 or even 2 in the beginning. That way you will learn how to manage the accounts before you start getting even more accounts. And so this is a great way to build access to premium credit cards, higher credit limits, better mortgaging rates, better car financing loans, faster pre-approvals, discounts or free upgrades, no credit checks on new applications or credit limit increases, and also easier approvals for your business services too if you happen to open up a business account at a financial institution where you already do your personal banking at. So there's a lot of benefits in doing this. And technically, the more bank accounts you have, the more relationships you build, the more access you have, and the more pre-approvals you're gonna get. And with those pre-approvals, you don't need to be worried about getting declined or ruining your credit score simply because majority of pre-approvals are going to allow you to get accepted for it. And I just want to note, in the US, bank accounts have like their own credit bureau. It's not really a credit bureau. However, it's kind of similar, and it's called the check system. And so when you open up a bank account, not all bank accounts do this, or credit unions or credit card brands, but sometimes they will put an inquiry on this check system, letting the check system bureau know that you opened up an account. And so if you open up an account at a bank that does a check system inquiry, it's wise to only open up an account every 4 months. And that's only if they do a check system. Prior to opening up the account, you can ask the financial representative if they do an inquiry on your check system. Like I said, not all banks do this, and this is only a US thing. They don't do this in Canada or in other international countries. And also, some financial institutions do a credit check for opening up a checking or savings account, and this applies to United States, Canada, and any other country. However, it's usually a soft credit inquiry just to verify your identity. However, it could also be a hard inquiry, and again, prior to signing up, you can ask if they do any credit checks for opening up a bank account or any other type of account that you're opening. That way, if you don't want to have a credit check, especially a credit check for a checking or savings account, you can decline that or opt out of that. Many banks allow the user to opt out of a hard credit inquiry. And I also wanted to note that the hard inquiries is sometimes also used for other pre-approvals and or overdraft protection for your checking account. You don't really need that, but if you do, you can do a credit check. It's totally up to you. Like I said, many banks don't do a credit check. And I just wanted to note that credit checks are not as bad as you think they are. So don't end up getting too worried if you do end up getting a credit check for opening up a bank account. But like I said, you can opt out of it. And usually they allow you to opt out if you go in person to open up the account rather through the phone or through online. So I recommend just make an appointment and then open up the account. We're almost at the end of the video and you're like, oh my God, I'm gonna get all these pre-approvals. My credit limit's gonna increase. You know, I wanna start applying to all these bank accounts immediately. And I just want to note that slow and steady wins the race. Opening up 20 bank accounts at 20 different financial institutions within a short time period is probably going to lead into trouble. Like, I have a booklet of credit cards and debit cards that I manage, okay? And this is a ton of credit cards and bank accounts. I don't expect everyone to do this. I don't expect everyone to be as organized as I am. And I also didn't do this within 2 weeks. I kind of built this over time. So I'm basically trying to say is start small. If you don't have a bank account, open up a bank account. If you already have a bank account, open up 1 or 2 at a different financial institution and then organize that information. Be up to date with your passwords and security questions and know how to access the online banking. That way you can get immediate access to your bank accounts, because you don't want to leave these accounts stagnant and you forget about them. For all you know, there's monthly fees that you forgot to waive in terms of putting a deposit in, and it starts to build because interest grows or other fees build on top of that fee. And so you end up doing collateral damage because you forget about it and they send it to collections, and then collections then goes on your credit report. So then you destroy the relationship with the financial institution, and also you're destroying your credit score and credit bureau. I'm not here to scare anybody. I'm just letting you know that slow and steady wins the race. And going through with the banks that you do want to work with makes more sense than just rushing and applying to all these accounts and you have no clue what you're applying to. Please read, please go through them. I always do. I compare and contrast different services from different bank accounts to see what they offer, and then I apply, and then I get that information, and then I archive it. For example, I recently applied to BMO Harris and they sent me like a pamphlet with a bunch of papers inside and whatnot. And so I'm gonna archive this and like upload it and have a digital copy. And once I have a digital copy, I kind of throw it out. But prior to having a digital copy, I would keep it. That way I have access to all that information, because there is vital information in this that you may need to know. And so I recommend keeping these, going through them and reading them, you know, prior to then throwing it out. And also always keep at least a digital copy of it. That way you have 24 access to it. So this is a great method in terms of having access to higher credit limits, multiple credit cards, multiple lines of credit, better business credit, better business loans, easier time getting approved. Trust me, the proof is in the pudding. The proof is in me. Like, I literally have a booklet filled with credit cards and debit cards. And so I know what I'm talking about. In the video description below, I do offer a free webinar where I provide information on how to really leverage credit in credit cards and how to organize your credit cards and bank accounts. This webinar is mainly targeted at those who have a steady income or have a lot of assets on hand, and from a zero understanding of credit to a full understanding of credit. However, if you don't have steady income or whatnot, it's still information that I personally think everyone should know, but it's more applicable when you do have income flowing or if you're sitting on a bunch of cash. Feel free to check it out. Anyways, don't forget to like, subscribe, and hit that bell notification. And I'll see you in the next video. Have a great one, everyone, and stay strong.